Okay, welcome to the deep dive. Today, we're digging into something pretty new, tokenized stocks.
Yeah, and specifically, we're looking at it through the lens of one source, some excerpts from a document called Tokenized Stocks, WhiteRock.
Right. So our goal here, our mission, if you like, is to really unpack what WhiteRock says these things are, how they claim they work, the upsides they point to, and get a feel for their specific approach.
Exactly, just based on this material. Think of it as a shortcut to understanding their take on this whole area.
Okay.
And the source, well, it definitely paints a picture. It calls tokenized stocks potentially revolutionary for investing.
Revolutionary. Okay.
You're bringing traditional stocks onto the blockchain to make things more accessible, transparent, secure. That's the big pitch anyway.
All right, revolutionary. Let's break that down, starting with the basics. According to this WhiteRock source, what exactly are tokenized stocks?
So they define them as digital representations of, real-world stocks, equities that live on a blockchain.
Digital representations,
Mhm.
like a digital twin for a share.
Essentially, yes. The core idea is taking that traditional share and making a digital version on this decentralized ledger technology.
And the source is really clear that each token is meant to mirror the actual share price and value.
Yes, they emphasize that. It's a foundational point. Each token corresponds to a share, moves with it.
Okay.
And crucially, they state that every tokenized stock is backed one-to-one by an actual share held safely somewhere in custody.
Ah, so there's a real asset behind it.
Sure.
That seems important.
They definitely present it that way. It's not just a number on a screen disconnected from the real-world asset.
Got it. And this all runs on blockchain technology, they say?
Correct. That's the underlying tech. They state all the transactions get recorded there.
Which is where the transparency and security claims come in?
That's what they argue, yes. The blockchain provides that sort of immutable record.
And they mention regulations, too, being compliant.
They do. The document notes they adhere to necessary regulations, framing it as essential for a, lawful and secure environment for investors.
Okay, so definition. Digital tokens, backed by real shares, on the blockchain, aiming for compliance. Let's move on to how WhiteRock says they function and the benefits. You said source connects these pretty closely.
Yeah, they really tie the mechanics to the advantages. It's less, here's the tech, and more, here's what the tech does for you.
Okay, like fractional ownership. That sounds like a big deal. The source says you can buy just part of a share.
Exactly. And this is where they really push the accessibility angle. If a stock costs, say, $1,000 a share, maybe you only have $50.
Right.
Well, with fractional ownership, they say you can buy just that $50 worth. It makes expensive stocks potentially much more attainable.
So it lowers the barrier to entry,
Right.
like significantly.
That's the argument. It allows for diversification, even with smaller amounts of capital. So for you listening, the idea is you could get a piece of companies that maybe seemed out of reach before.
Interesting. Democratizing access, they might say.
That's certainly the language they use. It challenges that traditional need for significant capital to buy certain stocks.
Right. Okay, what else? 24/7 trading is mentioned. That's obviously different from the 9 to 5 stock market.
Right. Traditional exchanges have set hours, weekends off. WhiteRock's material says their platform, because it uses blockchain, can operate around the clock, nonstop.
So you could trade whenever it suits you, middle of the night, weekend.
That's the benefit they highlight, yeah. Global markets accessible on your schedule, not the exchanges.
They also talk about seamless liquidity because of this continuous trading.
Yeah.
How exactly does this source explain the blockchain, providing that constant stream of buyers and sellers?
That's a good question. The excerpts we have don't really detail the mechanism for liquidity generation itself. They connect the platform's 200/7 nature to the blockchain and then claim this results in seamless liquidity because buyers and sellers are supposedly always available.
Okay, so they state the outcome, less the how.
It seems they imply the always-on system, combined with their platform design, is intended to facilitate that continuous matching of trades.
Gotcha. Flexibility is another point they make.
No geographical restrictions. Yeah, they suggest you can participate in international markets more easily.
Without the usual headaches, like specific brokers, extra fees for foreign stocks.
That's the implication, avoiding some of the traditional constraints and costs of cross-border investing. So for you, it could mean easier access to global companies.
And speed. Instant settlement is mentioned.
Yes, they attribute this to how blockchain transactions work, designed to settle much faster than the old T+2 system, where you wait a couple of days.
Right, reducing that waiting time.
Exactly, pointing to efficiency gains from the tech compared to traditional financial plumbing.
Okay, pulling back a bit, the source really hammers this theme of democratizing investment.
Definitely. They say it's open to anyone with internet access, trying to break down that old sense of exclusivity in finance.
Empowering investors is the phrase they use. Less reliance on middlemen.
That's the narrative, giving you more direct control, bypassing some traditional gatekeepers.
And we touched on transparency and security earlier, but let's revisit the blockchain's immutable record.
Means an unchangeable audit trail, according to the source. Every transaction is there, can't be altered.
And security.
They mention using advanced cryptography to protect assets and information. Standard blockchain security principles.
So for the user, for you, that means a verifiable history and theoretically strong protection for your investments and data.
That's the promise they're making, yes.
One last benefit they list is cost efficiency, lower fees.
Yeah, they claim reduced costs because you're cutting out some intermediaries, maybe fewer broker fees, custodian fees, that kind of thing.
Because the system is more automated.
That seems to be the idea. Streamlined processes using the tech, and they say those savings get passed on to the investor, to you. The specific fee structure isn't detailed here, but that's the principle they state.
Okay, that gives a good overview of the what and the general why, according to WhiteRock. Now let's focus specifically on their offering. Why does the source suggest choosing WhiteRock?
Well, they state a clear commitment up front, creating a, quote, fair and inclusive financial ecosystem. That's their stated mission.
A guiding principle. And they have that tagline, designed with you in mind.
Right. And getting more specific, the points they highlight in the source for choosing them include, number 1, regulatory compliance. They stress that they prioritize adhering to legal standards.
Positioning themselves as legitimate above board makes sense.
Absolutely. Second, they mention a user-friendly interface. They want the platform to be easy to use, whether you're new to investing or, more experienced.
Lowering the technical barrier too, not just the financial one.
Seems like it. And third, they list customer support having dedicated teams ready to help out. A practical service point.
Okay. Now the source uses some really strong language, framing investing with them as joining a financial revolution.
That's bold.
It is potent language, yeah.
What exactly in their description backs up that revolution claim? Is it just hype? Well, they seem to base it on the combination of all those features we've discussed. It's positioned as a fundamental shift because of fractional ownership breaking price barriers, 247 global access removing time and place limits, plus the claimed transparency and efficiency. It's the whole package they present as revolutionary.
So it's about moving towards a system they see as more equitable.
That's how they frame it. They reiterate their core beliefs in this context. Financial inclusion, breaking down old barriers, transparency, clear information, and empowerment, giving people the tools to grow their wealth.
Does the source material we have mention any, challenges or risks or the complexities involved in actually building this new system?
No, not in these excerpts. The focus is entirely positive, highlighting the potential, the benefits, the future vision. It's very much an advocacy piece for their approach.
Okay, good to note. And the call to action is pretty direct, right? Inviting the listener to experience the future of investing.
Exactly. And they quickly recap the key benefits again. Diversify easily, trade flexibly, invest globally.
Framing it as the path towards greater financial freedom.
That's the ultimate promise suggested.
All right, so let's try to wrap up this deep dive based purely on the WhiteRock source material we looked at. We've seen their perspective. Tokenized stocks as these digital versions of real shares.
Backed by actual assets living on the blockchain.
Right, and leveraging that tech for claimed benefits like fractional ownership, trading anytime, anywhere, more flexibility.
Plus transparency, security, and potential cost savings.
And WhiteRock's specific pitch from this source is about being compliant, user-friendly, supportive, and part of this bigger push for a fairer financial system.
Yeah, their stated goal is ambitious, making markets more accessible, transparent, and fair for everyone. They're inviting people to join what they explicitly call a financial revolution.
Okay, so here's a final thought then, building on that revolution idea from the source. If this kind of technology, tokenizing real-world assets, aiming for this level of accessibility and control does become more widespread, as WhiteRock suggests it might, what could that mean for how we as individuals even define financial freedom? If the tools and access points change so dramatically, does our understanding of what it means to achieve financial independence also need to shift? Something to think about, maybe, as this space continues to develop.